Good afternoon. We're concluding the market is closed for the day on 9/7 of 2011. Been a great volatility move. We had the volatility gap downs, then we've had volatility gap downs, and we've had volatility gap ups, we've had volatility gap up. Standard chart technical analysis, yesterday's low, when we hit that 24.14 on the low, is that today's upside volatility took us to a high of 25.48 on the Nasdaq Comp. That's a huge move within the volatility cycle. This is the last major high reversal. We started out September this way. We're above the 10-day and the 20-day. That's all standard technical analysis. That major resistance line, if we do go above it, we'll be taking a look at how we can get above this 25.43 consolidation, knowing that that high reversal was a 26.04 with the close of 25.46. Today's high is 25.48, so we're coming right into the major resistance level. So we started the market with the gap down on Tuesday and Wednesday gap up. Obama comes out on Thursday. Everybody's moving in. This is the original 2011 low. Once again, with volatility moves up, testing those lows, rallying, taking out previous highs here at 55.20, and we broke up to the high reversal of 2611.58, and we're headed back up in that leveraging up volatility. Down here, we were short-term oversold. We talked about it on the weekly charts. We talked about how to trade upside volatility. We talked about how to trade the gap downside volatility, how markets would put in a bottom, and how you can get constructive at a low. And that low from Tuesday gap down, which would have been on 9/6 right here, 9/6, that's right, 24.14, you came racing right up off the bottom. You've made higher highs. You're above the key moving averages. This is where the public will look to try to get in. So what we're going to be monitoring is how do we get up to the 100-day or the 50-day simple moving average, which would take us back up above the previous high. If we counter gap into here, then we're going to look at where we would be selling short into the move. Okay? And that 50-day moving average is at 26.42. That's that white line. This line is a 100-day simple moving average, which is quite above the market at 2702.7139. That the current constructive bottom has held. The thing about it is, within the volatility bottom, all the austerity around the world, all of the negativity here, all about Obama tomorrow, all about price volatility, bear volatility, bull volatility, doesn't matter. When we do go up, we'll be selling into resistance levels no matter what, meaning that this index is poised to break these highs tomorrow. And once again, that any of the upper end of these resistance levels into these key moving averages is to be selling short on the indexes when they make their move. The upside volatility and the down volatility is here to stay. Headline driven event is going to continue to cause gap downs. It's going to continue to cause gap up and gap downs in prices, and it's very choppy at the 2011 September bottom, and September is usually a big asset allocation month. Sorry, we did a lot of that in August, and part of September, which is a long ways away, is tomorrow is going to be the final first 5-day trading days on the Nasdaq Comp. Now, the key is for MMTs to go back and take a look at where their sector indices were that we did over the holiday weekend. We uploaded about 15 or 20 of them. And we all said there was one thing in common. Short macro time, upside volatility to the upside would come in from the downside volatility, did not take out lows. Therefore, the gap sequences is a proof that when you gap up above moving averages, daily moving averages, historically understood as not market maker activity but standard technical analysis is what it is. Great move on the upside volatility. We'll look at and see what happens tomorrow at the resistance. That's on the Nasdaq Comp. We've already uploaded the S&P 500. Our next one up after this video will be that Dow. And let us not forget that once again that the Nasdaq Comp ended up 75 handles. That's huge. Nasdaq 100 up 56 handles. The Dow up 275, and the S&P 1198 at 33 handles to the upside. Now, the Dow chart will be a little bit different. I'm going to conclude this one, and we'll work on the Dow.